So I just wanted to do a quick 15-minute video compiling some of the fringe analysis that I think was most important today. Nothing has really changed in terms of what I should share the last probably 6 days. Many of your on-chain and valuation and momentum indicators are doing the same thing. Last night, about an hour before bar close, the risk radar was published in the Discord server. I don't mind sharing it here on YouTube at times, just for the sake of sharing it and getting started. We can see that the valuation has been increasing, the market Z-score, and one thing that we noticed was that most of the other guys that are compiling analysis with me are on a maximum Z-score of -2 to 2, while mine was at 3. So I've made the adjustment starting 2 days ago to move to that, and when we compile our systems and what we get, our average is about 1.33, which is really good. Anything above 1, or in reference to the chart below 1, is where you want to consider accumulating, and you want to pay attention to where the market cycle is at, where you're at. If you're at the start of a bear market, are you deep in a bear market? But at the same time, should you really be looking at things as bear market and bull markets? No. If you're going off of the raw data and using qualitative metrics to justify or to supplement a bias and to manage expectations, I think you're doing quite well. We'll go over this real quick, of course. The medium-term trend probability indicator still max short. Only -0.8 on the LTPI. The short-only system, 0.96. Pretty close to that. What is happening here? I don't know why it keeps doing this. Anyway, and the market regime is showing that the overall trend is slightly weakening. Downtrend in the market, of course. The dominant denominator is gold, and the allocations here, as stated by the logic of the market risk radar, is either to short Bitcoin, Ethereum, Solana, or 100% PAX-G. Of course, you could stay in cash if you want to de-risk yourself from that entirely, but that's not what we do. That's not what our system and our group is designed to do. We're designed to maximize the output of your capital while limiting risk of downside as much as possible. Ideally, 100% of the time, every single year, every single trade that you close is a positive trade. Trying to do something that's merely impossible, which is not actually going to be the case. There will be periods of consolidation that extends over multiple months where you're entering into a trade and you're rotating between dominant assets and you're losing money because you're buying in at the top and whatnot. So to the point, that's the verdict coming in from that. Not much has been posted in the investing analysis channel, so we'll go ahead and disassociate from that. We'll open up with price. I did find it quite interesting that price has rallied since bar close yesterday, after a little bit of the nuke in the 2 days, the last 2-3 days ish. We can see that reflected in Solana and Ethereum's price action. I don't know if this is the bottom and we're beginning to actually rally and get some movement going on from up here. This may perpetuate for a while longer. Not exactly sure. I keep forgetting that I'm using something that's not the Epic Pit. And looking at some other coins like BNB, same thing here, Bitcoin Cash. Some altcoins are also following suit to an extent, to whatever they're worth. Looks like Network might be getting delisted, unfortunate for them. And let's see, one thing that I thought was interesting was the Bitcoin Cash case. Just because from the top, your downturn, right? So if we were buying in on trend confirmation on the week of April 21st, somewhere on the weekly bar close, you'd be buying Bitcoin Cash and still be in profit into this day. And then with Bitcoin itself, right, buying on trend confirmation alone, you're down 29%. From the top, you're down, what is it, 47? Yeah, 47%. With Bitcoin Cash, from the top, you're actually only down 24%. So you're down less than you would be if you bought on our trend confirmation coming out of the tariff drama nuke, which I found interesting. And overall, right, and I'll even go over this to showcase it. In a long-term sense, to date, Bitcoin is up over 190%. And then when we look at Bitcoin Cash, it had an interesting situation here where you would have entered. Is that right? Let me make sure that was right. We're entering it on the January. Yeah, so you would have probably gotten out and only gotten back in here, so we'll be fair with that. And the gains to date are not as quite as good, but in terms of allocating to Bitcoin Cash over Bitcoin, probably since 2023, late 2023, has honestly been the move. This pump here in particular was spectacular. 89% from late January of 2024. Let's see that. Much better returns than Bitcoin and better downside protection. I'm not involved heavily in the intricacies of Bitcoin Cash. I know it's a split off from Bitcoin and what their motive is and how they're running it, how their core is moving, and the explicit differences. But I know there's core issues and there's general AI pricing mechanics coming into Bitcoin, which perhaps are not coming to Bitcoin Cash, which maybe is a long-term concern for Bitcoin Cash to potentially just enter a long-term downtrend for the rest of eternity. Perhaps Bitcoin Cash does bleed to zero against Bitcoin, because as you can see throughout the cycles, Bitcoin Cash is bleeding against Bitcoin, and you look at the ratio, it suggests that. But something I thought that was worth noting, it might be, I don't think this would be a trend that would sustain itself, but maybe it does. So we'll move out of that and we'll go into some of the metrics here that I think are worth pointing out. The reason that this could be a rally to 70K or higher is simply because of these liquidation clusters that seem to be getting taken out. You can see on the 3-day, on the 1 month and beyond, we can see some better, we can get a better vision of what's to come. The levels that are here, sentiment is so low, and I'd imagine sentiment ought to stay super low as we get here, creating more short pressure to connect us to the 80K. And ideally, this is what would happen, and you have positive liquidity momentum. And then the rally itself, I don't know how high or far it could go, but we would be entering in on trend confirmation. Something I thought that was worth pointing out. On VLO, we look at the aggregated funding on the weekly. We can see that Bitcoin, the last couple of weeks, last month actually, has been printing 2 negative funding bars, right? For the first time since the post-2024 rally, which resulted in the great consolidation of 2024. And of course, we saw this throughout bear market times. So I think that's great. I think that's good to see. Valuation-wise, that is a score in the valuation systems. Going on the on-chain analysis, we had a lot of interesting ones to look at. One of which is actually, I'll come back to this on a later Twitter post. I saw that there's been revealed documents posted by Zero Hedge where, basically I'll read what he says. Jane Street, a Wall Street investment company, was behind the 2022 crypto winter, destroying Terraform by first depegging the token and destroying the ecosystem, then pretending it would rescue Terra, while effectively it was soaking up what little value remained, right? And I was not around in crypto at this point, but I was starting to read about it and hear about the crash. It was probably until late 2022 when I actually got involved and got ready, and then we started getting deployed in 2023. And reading about this, and back then, I learned about it, and it's been a while since I've looked back into it. So I asked Grok for some explanation on this, and you could always pause to read what Grok has to say here. But I think what's really interesting is basically they sold, right? They secretly pulled over 150 million worth of their stablecoin out of the pool on Curve, right? And like it says here on the points, it wasn't announced publicly, and then not too long later, someone else took out 85 million, and it caused a massive dump, and people were panic selling, right? Calls it a death spiral. $40 billion vanished from Terra Luna holders in days, and it kicked off the crypto crash, or the crypto winter of 2022. And of course, we have the new lawsuit and the information there, which I think is something interesting to read about. And yeah, I asked it to explain it in dummy terms because, for myself, it is difficult to understand. At times, I'm not a legal expert. It always helps. And I think when you watch YouTube videos, someone else reads it and then either gets an AI to dumb it down for them to read to you, or they read it to you and then they become well-versed and dumb it down. It's like someone knew the dam was about to crack, but nobody else did, so they sold all their beachfront property 10 minutes before the news hit, and their giant for sale sign made everyone else panic sell too, making the flood come faster. Now the people who lost their houses are suing the person, saying, "You knew and you made it worse on purpose." We'll see how the court finds. Right now, it's just allegations and a big fight starting, which is true. Maybe this isn't false, but do you really doubt this? Do you really doubt this? the biggest criminals in the crypto industry weren't actually individual scammers and some municipal foreign governments trying to exploit dumb Americans and old people. It was actually the institutions that run a traditional financial um, system trying to sabotage crypto, or maybe just doing it, for their sake. I don't think that's surprising at all. This was an interesting metric I saw here. Of course, everything works until it doesn't. Basically saying that Bitcoin hits a bear market bottom at exactly 23 months after the all-time high in every single cycle. So what they're saying is, at once a cycle hits its all-time high, 23 months later, you get excuse me, let me say that correctly. When Bitcoin, right? You can look at the chart itself to make it make sense, right? So we have an all-time high, right? And price reaches it again, and 21 to 23 months later, the next bottom is in. All-time high gets re-hit after the bear market, after that bottom is printed, and then 23 bars later, your bottom gets hit, right? And then same thing. And what we're seeing here is that we're now at that 23rd bar, which is quite interesting, I would think. And considering how high that bar is, it's almost like prophetical how that plays out. But everything works until it doesn't. And I don't think we should be looking at things in terms of bull markets and bear markets. Whenever you're performing quantitative analysis and you're running systems based on that and some qualitative metrics, you need to understand that entry on the trend and exit on the trend dying, or entering a short on the death of a recurring trend and continuation of a downtrend is all that matters. What is the prevailing trend? I go back to this. What is the prevailing trend? Obviously, the market is bearish. We need to be shorting. I don't know why this is not working. I must have too much stuff open. But anyway, why is the market going down? That's the biggest question people have, which is something that you get caught up in a lot. And you see people argue on Twitter all the time. It's down because of this, down because of that, which is always good to keep yourself informed on and trying to understand and learn about. But an investor who invests based on, oh my gosh, why is it going up? Or, oh my lord, why is it going down? Is always going to be behind and statistically never gets on the right side of the trade. The investor who enters on momentum, technical-based, quantitative-based systems, and even better, a combination of systems to understand to establish a complex criteria for specific entries, is always going to be on the right side of the trade. They're not going to miss it. They're going to miss the perfect top and the bottom, maybe, right? And this system is not designed to try and do that, because it understands that that's impossible, and you're going to get yourself chopped up trying to do that. But it can come close. The system, right, is something like this. Specializes in getting in here, maybe scales out a bit here, re-enters everything back in here, right, and then maybe scales back out or stays invested and gets out somewhere in here or somewhere in here, right? And then at somewhere in this zone that I just pointed out is where, because remember, this would be long, is where we would start shorting and betting on the downside, right? And then you would have your trend confirmation, your exit of the short. Something like this would be happening, and nearly 100% of the time, ideally, you would have deployed capital producing you gains in the same asset class, which is a lack of diversification, but it has shown to give us immense returns over time. And basically to that point, the whole point of it, right, is that this can be very true. This would likely look like it'll be true, but it's a midterm year. And Benjamin Cowan does a great job of pointing out what happens with midterm years. And he shows the seasonality from Into the Cryptoverse's website, which is very good, very great metrics. Unfortunately, there is a lot of paid stuff behind it, but I do like how he points out that trying to time every counter trend rally is difficult, which is why capital preservation is often a wiser move in midterm years. Yes, that is true, and that is generally a better strategy. right? But then, like I said, the momentum investing part of it, generally you don't lose capital and you don't lose substantial amounts. And he does a lot on his YouTube videos. I would recommend watching them on what happens, right? How that all works, and how that all goes with midterm years. And we can even look at the chart, right? So we had a time like 2022. Of course, that would be your midterm year section. Of course, that was just our bear market crypto winter. Our midterm year timeline was effectively 2018 up until 2020 or 2019. And he may be right in the sense that we are entering a zone similar to this area here, where perhaps our nuke has already happened and we may get our next rally, but it may not print a new high. It may print a new high. But the worst is yet to come. The bear market will resume, perhaps a crisis crash. And then post-2027, we may have a better looking economy. Trump and Warsh may actually do good. We'll see. And from there, moving forward, you have another bear market. This is something that could totally happen. And from Benjamin Cowan's perspective, he has other investments, or he simply is just not invested at all. And he's waiting for this to subside to get a good entry. I think this could very well happen. But, a rally like this is something that we will catch and we will not ignore. And to an extent, I may have a fundamental misunderstanding of what his base case is, but in terms of my base case, it's simple. There is an imminent rally that is likely to happen, or there's a possibility of an imminent rally that could take us back somewhere here above $100,000. There is a good chance of that. Could it not happen? Yes. And would we stay short the market? Yes, we would. Right? And when you're always on either side of the trade, it's very hard to feel emotional and to feel FOMO and to get impatient, because you're always printing money, or you're getting close, you're following the system. I think that makes it a lot easier for a lot of the people. Like, the three guys that I work with here in the server, one of them always had a problem with that until he developed a short-only system and started contributing, and now he just never panics. I never hear any concerns. It's just perfect. Right? Not perfect as in like, oh, it's like a big deal or inconvenience for me. Just in the fact that it's perfect how he is stoic about it and understands what's happening. And we already went over that. We can close those out. Julius made a good point. This has been being pointed out for a while, ever since it started crashing. Satoshi made this point about price returning to the cost of production. Of course, what tends to happen after we do that, we don't stay there for long. We could stay below it for like a few months, but not for long. And Darius Dale made a good point, basically just trashing the Fed. The Powell Fed was performing quantitative easing with reported CPI greater than 8%, which he says is 9%, right? And it was for the other tribe in office, so for the Biden administration. And he does believe that Warsh is going to be a net positive for Main Street or for the American people. Our country must overcome the Keynesian and Phillips curve dogma so that Kevin Warsh can implement the reforms necessary to stop the Federal Reserve from meaningfully contributing to the demise of society, right? And it's a good point. The Fed printing boosts our bags, yes, but it decays society. Someone like Warsh is what we want, and you might have an emotional bias, right? That you're like, no, I want the Fed to pump. I want to make a lot of money in crypto. To an extent, what is it going to be worth if eggs are $12 before 2030 and gas is a minimum of $5 a gallon wherever you go in the country, things like that. And then of course you're just poor and you're still making $25 an hour from the job that you went to school for, and you're never going to pay debt. And then debt collectors and colleges begin implementing something known as inflation-adjusted debt, where they basically take inflation and adjust how much debt you owe, plus the interest that you're going to have to owe as well, and apply that to that. That's a little hidden factor that no one's talking about. I don't think it sounds dumb. At first I thought it sounded dumb, but that is something they would do, and then not use inflation to help you, because usually it's the other way around. Alpha Extract here, great guys here, great work. They were basically mentioning the liquidity situation and how basically if a U.S. war environment, it does tend to boost liquidity, which over a course of maybe 6 to 12 months can lead to a positive move in markets, but it can be very stagnant and uncertain at first. But he is talking about how that said global liquidity inched higher by 0.2 trillion or plus 0.15% this week. You can see that on the chart here. And in our lag, by the way, it's this zone that was the bad liquidity rate of change, right? And this zone right here is what we're basically coming up on with our optimal lag, hoping that we move in accordance with price. And so great post as always from them, great metrics. Dirt in Bitcoin, another guy from the real world, basically pointing out that we are in a very overvalued spot. We're at an extreme, but extremes can get more extreme. The trend decides when, not the model, which is great, very wise. It's the point. It's the point, right? When we look at these and we see something like this metric, which I forgot to go over, right? Just because it hits a bottom, right, doesn't mean it's gonna like tap and go up in V reversal every time. And to this point, right, to the point of the 21 to 23 month bear market situation, you know, we're kind of looking at how these bear markets from the top, right, and when they end, generally you have the R-hodl ratio trending below its 1 year moving average, right? So you have it happen here and you have it finally consistently come above here. And I really like to look at these zones in which it is consistently red. And that's like your bear market zones, right? And I like that idea because this one, of course, this cycle is a little bit more choppy with that. But the general time it's been taking is roughly, it's getting closer to the same average time it took for these bear markets as well. It's getting closer. Another month or so would make that subside, but you know that might not be the case. You know, it may actually rally up a little bit, have a blip, you know, similar to this here, and then come back down. But to the point, we had that one, we looked at that one, and the last one I wanted to look at was that basically the ISM does need to sustain above 50, and perhaps it may go higher due to Korea exports. We'll see what happens. I think the ISM is an important thing, but other than that, I think that's enough for today. Just trying to keep it consistent, and God bless.